particular ticker or your stock and then type in investor relations, right? So just to show you, and then you're going to look for financial statements, but just to show you what that looks like. So if I type in Google investor relations, it's going to give me this particular entry, right, in the search results, right? I just click in investor updates, and then the first thing that comes up is the earnings. I know that this was for quarter four of 2024, even though we're in Q1 of 2025, right? And then you just need to click on the earnings release, right? Bam. That's how you find Google's earnings. And then they even have some more detail. You can get the 10K, you can look at the webcast and transcript, because generally after every earnings release as well, you're going to see some people from the company that come and talk about the earnings and future guidance. And a lot of times the future guidance might be more important than the earnings release. A company could have a blowout earnings release but then say we're not going to make any money in Q1, and when that happens the company's going to fall. That's what happened to ELF last week, right? Especially given the tariffs and the TikTok situation. Um, you could have a good earnings period, but if your future guidance is off, then the stock could still drop, right? So that's how you find earnings. Sorry for that. So looking at Google's earnings specifically, how do they make money? Google makes the most amount of money off of Google search. Just what I just did. I put a query into either Chrome or I put a query into google.com. And then what happens is a bunch of businesses' search results come up. And those businesses where you see the sponsored tab at the top, or the sponsored you'll usually see that language, then you know that that one or two companies have paid Google to come up in their search rankings. And then they also have some additional products that aren't just the standard search rankings. Myself, even for professionals, they have like some pre-screened professional ads, local ads, all sorts of stuff, right? So that is Google search. If you see the numbers on the screen, Google search is still growing, right? Last quarter of 2023, they made 48 billion. Last quarter of 2024, they made 54 billion dollars off Google search alone. That is their behemoth. They are making more money than Facebook off of their ads, right? So if you're talking about the ad space, general search, Google is king. Social media search, or social media ads, Facebook or Meta is king, right? They are also making money off YouTube ads. For those of us right now, we are streaming on YouTube. So if before a stream, if before a video, in the middle of a video, you see one of those ads, that company is paying YouTube money. The last quarter of 2023, they received 9.2 billion off YouTube ads, and in 2024, the last quarter they received 10.4, 10.5 billion off of YouTube ads, right? And for me, I think this is where a lot of growth is. The reason why I say that is because, once again, I always say this, my daughter's favorite platform, and she is 5 years old, almost six, is YouTube. And it's weird that the oldest, not weird, just abnormal that the one of the oldest platforms for consuming media has the youngest audience. So I still think people in 10, 15 years, meaning my daughter, they're still going to be watching YouTube. And I think they're going to get a lot more of their information through video than through traditional channels, right? We could talk about ChatGPT is going to steal YouTube search they're going to steal their search. Okay, but what about their video base? How is how is ChatGPT going to replicate their video search engine? Because if I'm a creator, which I'm on YouTube right now, I'm going to generally go to the platform with the most amount of users, and I just don't see how you catch up to Google or YouTube, right? In terms of its video platform. Meta is probably the only thing that I can think of, or TikTok, that would potentially get close to its platform. Um, in terms of the amount of sheer video content, music videos, you name it, that you can find on YouTube. Even all of the news organizations and platforms post, or sports platforms post all of their highlights on YouTube because more people watch it there than in their own sites. So the fact that YouTube ads is still growing, it looks like it grew, it looks like it grew a decent percentage, but I think this is probably one of the biggest areas for growth going forward. Google Network is other ads on like Google Maps, all of Google email, all of their other platforms. So that went down a little bit. But if you just look at their advertising revenue from the final quarter of 2023 versus 2024, went from 65.5 billion to 72.4 billion. If you just think of that from a scale, this is a massive company. It makes $72.4 billion in advertising alone in a quarter, in 3 months, not in a year, but in 3 months. Like, that's ridiculous, right? You look at their services revenue, the subscriptions, the platforms, the Android devices. Like, I have a Pixel personally instead of an iPhone, and that's up by about $1 billion from the last quarter of the last year. So, and then if you look at the cloud revenue, right, it went from 9.1 billion to 11.9 billion. That's still some decent growth as well. It is like number 3 in the space, maybe even further back in the cloud revenue. Number 1 is AWS, Amazon, and then number 2 is Microsoft's Azure, and then Google Cloud is like number 3, number 4, number 5 in the space, right, in terms of cloud revenue. But the fact that that's growing, it went from 9.1 or 9.2 billion approximately to about 12 billion. That's also another area in addition to YouTube where it could continuously keep growing. But if you just look at that search revenue right there, behemoth, and people, Google slowing down, ChatGPT is going to eat their lunch, right? I don't know about that, man. Look at that search revenue. People are still just giving Google wads of cash to find potential customers. And then even if you look at a lot of videos showing you how to use a lot of the LLMs or ChatGPT or Claude and whatnot, they still have hallucinations. And so the general advice right now for ChatGPT and Claude and Gemini and all of those things is that you should go and then do a Google search to confirm their results. So it's almost like ChatGPT is like an additional tool on top of Google, if you ask me, which is why I don't know if they're really gonna bite into their search results. And if I just think about how I use ChatGPT and a lot of the LLMs out there, I don't use it for search as much. And if you look at Google search results now, they integrate Gemini's their AI bots results inside of their search results now. But I feel like I use most of the LLMs as like a tool to help me get things done quicker rather than to replace Google. I don't think it's replaced my Google searching at all. And but I do use it to supplement me, like finding new ideas for things, how to what should I call this episode potentially. Even I'm an attorney, for those that don't know, I used it to help me write a motion last week. I'll feed it a bunch of research and my outline and the actual motion or the opposition or something of that nature, and then use it to help me make a more clear argument. But I use it more of like as a tool rather than something to search with. That's just me. I have heard of other people using it to search, but I think the proof is in the pudding. Look at the numbers, right? It's growing consistently. Its biggest segment, its biggest revenue driver keeps growing. So if it keeps growing, I still like it as a stock personally. This is just my and if you listen to me, I still have 3 leaps in Google. Um, Even though the price has gone down and it dropped after earnings because people didn't like some of the forecasting, I still think this is a behemoth, something to get on a pullback, right? Just because of just how much money they're making. and it seems like this is a company that continues to grow. Somehow this massive company continues to grow, and the total revenues for this quarter was 96.4 billion. Google is making almost $100 billion a quarter. That's ridiculous, right? Which is why it's such a valuable company. The only thing, once again, that stands in its way is the DOJ and the court system. But with the new Trump administration coming in, maybe they'll be more lax on Google's alleged monopoly in the search world, right? Because one of the potential remedies that the Biden's DOJ suggested was that they divest themselves from Chrome, which I am using right now, and I'm using Chrome not because it came with the laptop. I used Chrome, and this is a Mac laptop, because it is the best browser out there and has been for a long time now. And this is from me, who used to use I used to use Internet Explorer when it first came out. Then I switched to Firefox. I used to use Opera, and then I recall Chrome came out, and it was just better and faster than all the other browsers. So it was something that I just stuck with. So I don't necessarily think Google is a bad monopolistic player. I think it just makes better free products than everybody else, and that's why it makes the most money. You know, that's just my opinion. If we look at the balance sheet, I always look at the balance sheet to go look at the asset to liability ratio, right? If you look at total current assets, it's 171 billion. To total current liabilities is 81.8 billion, which is greater than a 2-to-1 ratio, which is always great. When you look at total assets versus total liabilities, it's like a 3.5 to 1 ratio, which is amazing, which means Google is going to be able to weather an economic downturn because it has more cash, it has more assets than it does debts. When we're saying liabilities, that's primarily what we're talking about is debt, right? So it has a 3.5 times as many assets as it has debts, which means if we start losing money in the economy, if the economy tanks, Google should still be all right because it has $24 billion of cash on hand. And in terms of like marketing securities, I don't know if that's crypto or stock and other things, other companies. You know, Google's total cash and cash equivalents, it has $110.9 billion of cash just chilling, right? Google is a monster. So the issue is, let's go look at the stock price, right? Google, right? And if you look at the ticker, Google has, or Alphabet has two tickers, GOOG or GOOGL. I usually do GOOGL, or if I were to buy, it's GOOGL. I believe the reason is I think these are voting shares, GOOGL versus GOOG, right? But if you look at them both, they look exactly the same. If they don't, then that is actually an arbitrage opportunity for you because it's the same exact stock. So if they don't look the same, the other one's going to follow the other, but they're going to look exactly the same, right? So looking at GOOGL, right? Here was the day before earnings, and then Google came down after earnings because people didn't like, I think that it missed on a forecasted number. Don't quote me on that, but it was some forecasted number, either related to their search or forward guidance for the first quarter, something of that nature, right? But when I'm looking at to buy something potentially long term, and this is what we're talking about today, it's like fundamentals. Because if we were just talking about trading this, I wouldn't be looking at the earnings. But if you were to trying to get into Google long term, is this a company that you think is going to be around a long time? Is it cash flow positive? Is it actually making money? Um, then this would, and just looking at the balance sheet, does this look like a company that could survive a downturn? If that's the case, those are generally my qualifications for wanting to buy something. And then the fourth thing is going to look at the technicals of the stock, like the stock price, to figure out what's a good price to get in, because I never want to get in at an all-time high. Google reached an all-time high just before the earnings at $207.05. If you bought it at the all-time high, you're hurting right now. you're sick to your stomach, which is why you should never buy anything at an all-time high. If there's any piece of advice that I have, is that don't buy any asset when it's the most expensive. Get it on a pullback, right? Wherever you're going to get it. But if you just look at from where it was, people were expecting Google to blow it out of the water a little bit more. I think in terms of its earnings estimate, that's what it was. It was slightly below its earnings estimate, but like a slight miss. But the earnings per share, I believe, was up. So do I think that makes Google a bad company? No. Is it potentially a little overpriced? Potentially. But is this the type of company that seems that is like it's going to be bigger in 5 years, 10 years? Absolutely. So if you're looking to invest, like for me, Google is always on my list, and I'm still in two leaps specifically on Google. So they're getting ready to expire in June. And usually, if you're talking about leaps and time decay or options in general, the time decay is going to start picking up on my leaps when we get about 3 months away from expiration. So that's going to be the time where I decide whether or not I want these leaps to turn into shares or if I want to sell, right? All right, so that is Google and how Google makes money. All right, let's go back to the next company. Next, we are going to be talking about Amazon. It's a little out of order. All right. Same way that I showed you for Google, that's how you're going to find Amazon's earnings. And so let's look at their earnings specifically for the end of the year and for this particular quarter, right? Their net product sales, or let's say their total revenue was $187.7 billion. So the only there's a few companies that I see with greater revenue than Google, and it's Amazon, right? In terms of how much money that they are bringing in, um, which is crazy. And for the entire year of 2024, they brought in $637.9 billion, which is a crazy amount of money, right? And so this is why these companies are considered trillion-dollar companies, just because of the sheer amount of money that they're bringing in every single year, right? But for me, for Amazon, what's more important is their segments. And this is where people who aren't really knowledgeable about Amazon get mixed up. They think that Amazon makes the most money from its online sales. Yes, it does generate more revenue from its online sales, but most of the income, meaning profit of Amazon, comes from its cloud services, right? Even though, and this is where margins are really important to understand, it's not about how much money you make, it's about how much you keep, right? So, off of its online sales in North America, it brings in 115.5 billion but spends 106.3 billion to bring that in. So it only makes like 9.2 billion dollars, and if you added with international sales, 10.5, 10.6 billion dollars in profit off of its actual online sales, stores, warehouses, things of that nature. AWS, its cloud computing division, brought in 28.7 billion, but it only took 18.1 billion dollars to operate or to obtain that 28.7 billion, which is why it brought in 10.6 billion dollars in profit just from the cloud computing division alone. If you split out AWS from this other revenue here, it is 50% of Amazon's revenue. So this second vertical is real, or not revenue, but of its profit. So this is the most valuable component of Amazon right now, not its online stores. It's its cloud computing division, right? And if you look at the entire year of profit, it made $39.8 billion dollars off AWS and only about what 28, $29 billion dollars from its North American and international sales combined. So AWS is what, 55, 60% of its annual profit, not revenue, but profit. So how AWS goes is how Amazon goes, right? So if you think about what people are looking at to figure out if they want to invest in Amazon, it's primarily this. And Amazon is all about growth. It keeps dumping money back into growth. So people speculate that it could probably get these numbers up if it really just focused on obtaining or becoming more profitable rather than growing consistently. But as of right now, AWS is king, right? The margins on that are ridiculous. And actually, let's go back to Google. Something else that I wanted to kind of show you. They tell. So if you look at the margins too, right? That's you're looking at. So this is operating margin, not like gross margin, but like something in the 25s and the 30s, or like Nvidia, you're gonna see even more than that. That's what you're looking for. Is like how much are these companies actually keeping of their revenue? And so with Amazon, it's like a two-sided story. With their online business, they're not keeping that much of their revenue, but with their cloud computing division, they're keeping a ton of their revenue. Specifically, if this is maybe like 35 to 40%, right? If you're just I'm just dividing that by the gross sales, right? At least for this quarter. Yep, same thing here. About 40%. All right, and then looking at their balance sheet, look at how much cash Amazon has. Oh, sorry, 2024 has $78.7 billion of cash just chilling. Um, in terms of total assets, $62.4.8 billion of total assets. Their total current liabilities is 179.4. If you add it up with these things as well, um, just thinking of total liabilities, that's probably around, let's see, 180 plus 80s, 260, 300, say $340 billion of total liabilities, which is about a 2-to-1 ratio with the total assets. So once again, Amazon has enough cash to stomach a potential downturn. Specifically, just actual cash on hand, having about $78.7 billion of actual cash and 22.4 marketable securities and accounts receivable, meaning money owed to them at 55.4 billion. Amazon has a ton of cash to stomach a potential downturn, right? Which is why it's a massive company, $1 trillion company as well. Let's go look at how its stock performed after the earnings release. Go to a day chart. It it came down a little bit. It released earnings, I believe, on Friday, and it did come down a little bit. Once again, it hit an all time high here of $242.52. You are sick to your stomach if you bought Amazon at an all time high, which is why you should never buy anything once again at an all time high. Wait for it to come and have a significant pullback. If you are zooming out a little bit, Amazon tends to pop at that 50-day moving average, but it's always better to get it at the 200-day moving average at a better discount. So, in terms of where I would look to buy Amazon, because I don't own it, would probably be around $200. Just to give you my price of where I would think about entering, just looking at the technicals, and it tends to bounce around that 200 moving day average. It doesn't get down there a lot. So, if it does, like look right here, it kind of came down a little bit, but it bounced right there. Came down a little bit past it, bounced right there. And then here's the 200 right there. I'm going to move my alert to $1 before it. And that's where I would potentially think about buying leaps on Amazon or buying the stock itself for my portfolio. Because if we just looked at the earnings are growing. AWS consistently grows. Even its online retail business is consistently growing. Do I think Amazon's going to be bigger in the future from the looks of things, even just growing with inflation? Absolutely, right? And especially in this particular administration, Do I think Amazon's going to get bigger? Yes. I even think, didn't Bezos or the Washington Post refuse to endorse a candidate this year after the talk with Trump? So all of the major tech executives right now are kissing the ring. And if we know how Trump operates, I think that's going to do well for them over the next 4 years, right? Especially if they just kind of stay out the way too and stay out the news. All right, the last one that we are going to talk about specifically because I entered a trade on AMD. I don't know if this was Thursday or Wednesday, Thursday, or Friday. I entered a trade on AMD, which is number two in the semiconductor GPU space behind NVIDIA. And it's a far back number two. Like they're nowhere near making the type of money that NVIDIA makes, but in terms of the graphic processor um, chips, graphic processing chips, they're number two in the space. Where I would say they probably have the next best chip after Nvidia for LLMs or for AI, for cloud computing, etc. In addition to their CPUs in a standard computer market and their gaming chips, which is like their segment number two and number three, if we're just talking about how they make money, that's how AMD makes money right now. So looking at their earnings release, right, and quarter four 2024, and for me, it's about comparisons too, right? So their revenue is up year over year 24%. Because if you look at the last quarter of 2023, it was 6.16 billion, and this quarter, the end of the quarter was 7.65 billion. So is Nvidia growing? Yes. What I like the most about it is its margins are growing. Its gross margins of the last quarter of 2023 was 47%. Of this last quarter, 51%. So it's finding how to make more money off of its current products, right? In terms of, or it's more efficient with its earnings right now because it's keeping more of every dollar that comes in, 51% to be exact, on the gross side, right? Even the operating margin and the net margins are up a little bit, right? So the net income is down, and just because AMD is a smaller company, and I assume this is probably due to paying some executives and whatnot. My reason for investing in this company, at least from an option standpoint, is I think if chip prices do eventually come down and they're looking for that second tier, like, because I generally am only investing in number one and number two in a particular space, that AMD has a lot of room to grow into that second tier space. And I just like the fact that it's growing top line revenue and gross profit up. And if the net profit is down, that just means they need to kind of tighten up salaries or who they're paying, that sort of thing. But the fact that the chip business is pretty much they design it. So and then just to kind of understand the chip industry a little bit better, AMD, Nvidia, they are chip designers, not manufacturers. They all pay TSM, Taiwan Semiconductor, to manufacture the chips that they design. So essentially, what they're doing all day is using software to design a chip, and then they send that schematic over to TSM that manufactured it, which is why a lot of these chip companies have larger margins because they're not spending money or capex into actually building these fabs or these chip plants to manufacture them. They outsource that to another company that charges them for that in TSM. And other than like the Intels of the world, and I'm not sure if Micron manufactures or not, there are very few U.S. Based chip manufacturers. At the moment, everyone gets their chips manufactured in Taiwan, which is why um, people are afraid of any potential conflict with China. Is not necessarily because of any humanitarian beliefs. It's because of money, right? If China were to invade Taiwan, it would greatly disrupt the semiconductor industry which powers our AI, which powers cloud computing. And that is why the US government is extremely interested in whether or not China is going to decide to invade Taiwan or not. Right. Let's see. Just looking at that. Let's see if we can find anything else in here. In terms of the segment that is down, their gaming segment is down 59%. The center revenue was up 69%, and that's essentially their AI chips, which is the AMD Instinct GPU, right? This is like their competitor to NVIDIA's Blackwell and H100 chips, and it's seen 69% growth even though Nvidia is growing as well. AMD is growing because remember, we've been hearing that there's been shortages of Blackwell chips or that they're sold out. So if they're sold out, then there's a secondary market for maybe chips that aren't as great, but the second player is also seeing a 69% increase year over year in their GPU cells and their CPU cells as well. And whenever you see data center revenue, right, which is an increase of 94%, they're talking about their GPU processors and these new CPU processors that they have as well, right? See, is there anything else? Let's go look at their balance sheet. Here it is. So because this is a smaller company, not as big as Nvidia, Google, Microsoft, Amazon that we were just talking about, it has 3.7 billion of cash on hand, total current assets of 10 or I'm sorry, 19 billion, total assets of 69.2 billion dollars, right? Total current liabilities 7.2 billion. So if you just take that number, because sometimes like if you look at what they're counting as an asset like goodwill, like how do you value goodwill, right? Other than like giving it a value. But like I don't know if I trust this $24.8 billion because that's like very like I just don't know how you put a specific number on your goodwill, right? That's not inventory, that's not cash, that's not like a security, right? So that's one thing that I'm looking at. I'm like, I don't know if I necessarily agree with that number. Not that I have a separate calculation for that, but for most of its its biggest asset to be its goodwill, that might in fact be true. But how do you put a $24.8 billion price tag on that? And then how do you know that it grew 4 billion from the last quarter of the last year? I don't know. But looking at its total current assets and things that are tangible, 19.19.5 billion versus total current liabilities of 7.2 billion. That's greater than a 2-to-1 ratio, 2.5-to-1 ratio, which means financially, this still looks like a company that's doing well financially that could probably weather a downturn one way or another, right? So, from a fundamental standpoint, I like AMD still. I like its balance sheet. I like the fact that it's growing its top line revenue and gross margins and gross profit. That's up year over year. Its AI segments, its GPU, CPU segments are up, and data center are up from a 70 to 95%. So does this look like a company fundamentally that's going to be around for a long time? I think so. Do I think that it's going to continue to grow? I think so. It continuously beats earnings. If we just go look at the last few earnings periods, right? And you guys just see I Googled that. I didn't chat GPT that because it's faster. It still consistently beats revenue, keeps growing, right? We've been talking about that. It beat its expected revenue. Its earnings per share was pretty much right on the mark, but it's a consistent company that keeps growing its revenue every year. So I like it from a fundamental standpoint, which is why I bought some leaps on it last week. Because out of all of these companies that I just showed you, right, we talk about Google. Look at the chart. Close to all-time highs, even though we had a dip after earnings. Amazon, close to all-time highs, even though we had a dip after earnings. If you zoom out, right, we're on a 5-year chart for Google and Amazon. Now, if we look at AMD, it's not close to all-time highs. Looks significantly discounted, and which is why I say I never want to buy at all-time highs. I want to buy something that fundamentally looks good, that is at a significant discount from its all-time highs. So if we drew a 5-year fib, well, actually, let me go to a weekly chart just to make sure that, yep, we drew a 5-year a Fibonacci retracement off of a 5-year chart, putting the 100% at the high and 0% at the low over 5 years, right? This thing is 60% off right now. And so 60% off of a company that I think is pretty fundamentally sound, that's something that I want to get into long term. Also, if you look at the relative strength index, right, which is just showing you how exhausted something is, this thing looks relatively exhausted. If you look at a 5-year week chart, the most exhausted it's been over a 5-year period is about 32.33 on the RSI reading from a weekly chart. It's almost there right now. And what did it do when it got there last time? It effing popped up. That would have been the best place for you to get AMD over the last 5 years, other than 5 years ago, would have been at this point when the relative strength index was down here, which is where it currently is, which is why uh, I, let me turn off my money. I didn't know I had my money showing. Hold on. Which is why um, where is it? I purchased 4 leaps in 2 separate accounts and 2 retirement accounts on Friday. And the price that I got in terms of the stock price, it was around 109.50. Even though it's at 107, 108 right now, I still like it, right? And for those reasons that I just said, that's why I got in. It's significantly discounted. It looks extremely exhausted. Even if you zoom out on a 5-year chart, it hit this fib level, which I've been talking about, I think, for almost a month. If you go back and look at the prior podcast over the last month, I've been talking about that 110 level. It hit it. I got in around 109, right around this fib level, actually, at 109.50. That was exactly around the price that I bought my leaps. And I got into the, these the hundreds? I got into the hundreds. That's my strike price. The June 18th, 2026. So that expires in about a year and a half from now. So I got about a year and a half for this trade to work out one way or another. Just to show you why I purchased that particular one. I usually like to go deeper in the money, but I didn't see anything with liquidity other than this particular strike here at 100. I think I may have found something in January, but I wanted to go a little further out, and these were a little more expensive to like get the 70s, right? I would have bought these, but these were what, 4,300, 4,400 bucks, and these were only 2,900, and the delta was at 70. So as long as it's over 50, like, that's still a pretty strong delta. If it pops up, this is going to kind of come in the money and become an 80 delta. But I'm always buying something in the money, and I'm usually wanting to find something that's liquid, and the liquidity was here at what, 1,400 open interest. I usually like something over 1,000. Even with leaps, I even may buy something that's down in the 500 area. But ideally, I want to find something that's extremely liquid so that if I decide to sell this thing, it's going to be easier to get out because there is more liquidity in this particular strike price, right? So that's AMD.
Quick question: when did you execute that?
I think it was Wednesday. It had to have been that day that it dropped to that price. I saw it drop back to 110 and below, and I had it alerted me. What day was that? And it's at 107.50 right now, even down to 107, 106 right now. So it's still there. I think it was on this day. What was that? Thursday. I think I bought it Thursday because it popped up And I was like, look, if it comes back down below that fib level, I wanted to get in. I even think I set a just a buy there, an option. I had already set up my trade where it was just going to trigger if it hit like 109.50 or something around there, and that was like exactly where I got in. But yeah,
Nice,
that
nice.
that was Thursday. It's still there, but like that's up to you if you want to trade. I try. I'm gonna go into my disclaimer soon, but that was my reasoning for getting into the trade. I still liked the fundamentals even after the earnings drop, and then it didn't drop that much after earnings. It kind of bounced right back. So I was like, okay, here's like this new level right here at like 106.50 around there. It's kind of this new level that it bounced off again on Friday. So I just like this area around this fib level. Considering I still like the fundamentals on AMD, it's number two in the space. Think it has a lot of space to grow, and it's relatively exhausted even on a 5 year chart. Right? If you zoom out, even if you take a monthly chart, look at that exhaustion down here. The lowest level where it was exhausted over the last 5 years was here, and look, we're back there again, even on a monthly chart. That is my hypothesis. Even if you're looking at the all-time high, 227.30, look at that discount, right? It's yeah. It's discounted. Even if it keeps dropping, it's still discounted versus somebody who bought it up here who hates the world probably stopped trading because AMD is 227.30. Even if you bought it here, that having it down here is a better loss than buying it at an all-time high, which is why I never buy anything at an all-time high. Right. All right. Last thing. Trump tariffs are affecting a lot of consumer stocks, specifically one that I own in my long-term ELF. Blindsided by a lot of the Trump tariffs and the reactions, and then people giving guidance due to the tariffs and the China exposure. So if you own anything with any China exposure, be wary. And like the thing is, I don't know what Trump's going to do today versus tomorrow. There is, for me, like, this is not trying to be political. This is me trying to read the tea leaves as somebody that trades the stock market. I don't see a North Star from him, right? I don't. He can have tariffs on China tomorrow, and then he can meet with Xi next week, have a great lunch, and then take the tariffs off. So like I don't know, and I don't know what they're doing from a day to day basis. I don't know if what they do is going to hold up in court because of how they do it, and they don't move things through Congress all the time and the executive orders, and then some of the executive orders aren't even thought out completely. So just be wary if you have any stocks with China exposure. Even some of the semis are this way right now. Just be wary because anything he might say or do or some new executive order could potentially blindside a particular industry that you're in or that you have an investment in. So really, I'm kind of just waiting for the dust to settle. I had to get an AMD though because that was a long-term thesis of mine, and like I said, I'm just trying to execute now. Like I'm not trying to study. Like I'm going to lose on some trades and I'm going to win on some trades. But if I see something that meets my setup, I just execute now. I waited for AMD till after earnings because it got close to that 110 price right before earnings, but I waited for earnings. I usually want to wait a day or two after earnings to get into a trade. I got in close to the end of like, I think the second day after earnings. So if I didn't see a significant drop, which is when they usually happen, is that day of earnings and the second day, then that was enough for me to kind of hop into AMD. So, looking at weekly stock picks for next week, where I'm looking, just have my disclaimer, which is also in the YouTube description. This is for informational purposes only. This is not investing advice. Ideally, the whole purpose of this is for you to be able to educate yourself so that you can make your own decisions as to what you're trading and what you're investing one way or another, right? So refer all of your trades to your investing professionals. I'm just an attorney that happens to do this in my spare time, and I have a lot of money of my own personal money in the market, which is why I do this every week as well to keep myself accountable. So, how am I building my watch list from a swing trading perspective next week? I've only made one swing trade There's actually two. If we count the leaps that I just did, even though I did that in my retirement accounts, I've only made two swing trades this year. One on a super short term basis, and this one that I just showed you on AMD on a long term basis. But if we're talking about building like my short term swing trade watch list, meaning a trade that I would likely to be in for like anywhere from like 2 days to 3 to 4 weeks, what I'm usually looking for is what sector is currently trending, right? And I do that by going to koifin.com, looking at the US sectors here, and going to this particular tab, and then I'm just looking for over the last 30 days what appears to be trending. So for me, what appears to be trending is gold miners, financials, and healthcare. I was reticent to or hesitant to get into healthcare last week because a lot of big companies were reporting earnings. But now that that's over and there haven't been any huge crashes, for me, those are the top sectors. If I had to weight them, gold, looking for a pullback on gold, not necessarily GDX, just because in my experience, GDX is more volatile than the commodity itself. XLF, which is the big banks, credit card companies, insurance companies, and I like potentially healthcare if we see a greater trend coming next week from that. Then those are going to be the three sectors that are on my list to swing trade next week if we have a pullback. Specifically GC, and you'll see I have alerts up because I've already been looking at these damn things. I didn't get a pullback last week. Actually, let me go back to my other view. So GC, this is the gold futures, right? Look at the trend on this thing: higher highs, higher highs, right? Higher lows, low here, higher low, higher low, higher low, higher low. So this is a positive trend. I would be looking for gold on a pullback. Specifically last week, I was looking for a pullback to that 2800 level. Nice round number. Looking at some support right there. So that's kind of where I'm looking to enter a swing on gold. Maybe even right here. If we're talking about earlier in the week, that 2850 level looks good too. I like that on gold, but I wouldn't trade GC because I don't trade futures. I would do that through GLD. And if you look at GLD, it looks very similar to GC because it is pretty much the same exact. This is just the ETF of gold rather than the futures, but the GLD tracks GC. So that's why the chart's going to look almost exactly the same. And I think I was looking at around that 261, 260 mark for GLD. If we're talking about XLF itself, still looks good. The ETF itself I was looking at. JP Morgan I'm still looking at. I don't like Bank of America as much. I still like Wells Fargo. I don't like Citi as much, but Citi even looks good. Citi looks better than Bank of America. I would like to see it break this level and then pull back before I would like Citi. I love Visa, but Visa is mad expensive on the option side. I like MasterCard. I think MasterCard's pretty expensive too on the option side. And same thing with American Express, but I would like it to break this level and then pull back before I would like anything on American Express. I like that 325 level right there. That's XLF. And then the last sector, let's look at XLV Healthcare. Sorry, I got my baby in the background. XLV is getting ready to start to trend. So I would like to see it maybe get above 149 and then pull back. Oh, look at Lily. I'm so pissed. It came 2 cents away from my entry price and never looked back. My entry price was $7.25. It came down there on this day and never came back. If I would have had it $1 up, like I would have made some really good money on Lily in my long term. J&J looks okay. AbbVie, I don't know. I'm kind of Abbott Labs looks decent. I'm kind of wait and see on XLV next week. I want to see what it does next week. If it can break that high of 149 and then pull back, then I'll probably be more interested in what the sector looks like. The sector doesn't look as bullish as the financial sector or gold. So those are the two primary places I'm going to be looking. No, and then I'm waiting on KRE too. KRE looks okay, but yeah. So next week, from a swing standpoint, I like GLD through GC, and I like XLF. I like JP Morgan. I like Wells Fargo. I like Citi potentially. I like Visa if you're interested in buying expensive calls or expensive options, and MasterCard as well, and the same with the American Express. But I would say my top would be like XLF, JP Morgan, and Wells Fargo for next week in the financial sector. And that's it. That's all I got for this week. Do we have anything next week? Oh, in terms of earnings next week, we're almost out of earnings season. Nvidia is the last big shoe to drop, but you got a lot of companies in XLP, the consumer staples, McDonald's, Coca Cola, Shopify, which is on my list of stuff that I own in terms of leaps that are reporting next week. Cisco, but a lot of the major Mag 7 companies have reported, with the exception of Nvidia, which is probably the week of February. See, that's the. Where's Nvidia? Walmart is still up on the 20th. Damn, where is Nvidia? When does Nvidia report? Maybe it's even later. Nvidia reports on the 26th. So Nvidia, Salesforce is pretty huge too. This Nvidia is like the last big shoe to drop in terms of getting out of Q1 earnings, but we kind of have a lull in some of the massive corporations outside of the consumer staples sector reporting next week, and then Nvidia is the last shoe to drop that's going to affect the semiconductor sector as well as the all of the tech sector. So over the next week or two before Nvidia reports, you should be able to trade some names in the tech sector or semiconductor sector because most of everything is reported. However, looking at the tech and the semiconductor sectors, they are the weakest sectors in the market right now. So I don't know if I would be trading these things to the upside other than from a long-term standpoint, not necessarily from a swing trading standpoint. And once again, that is just my opinion. All right, folks, I have to. Any questions, concerns, or anything? Because I got to go to breakfast and then get ready to shoot this music video today.
Nope, you're game today.
All right, folks, until next week, next Sunday, Mokama Sunday service, making it rain without the umbrellas, 8 a.m. every Sunday on YouTube. All right, peoples, have a good
All
one.
right. Appreciate you.
Yeah.
Appreciate you.
All right, deuces.